value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. Welcome back to the show, Rick.
Thanks for having me on, Jim. It's always a pleasure.
Is the shine off gold right now?
Well, today it is, that's for sure. They've got the December futures down $90 right now, and I would say it's just a little bit overdone. But having put out commentary of my own lately that says we may have a very, very, very important turn in the dollar coming, I'm taking this selling in gold as serious.
An important turn in the U.S. dollar. It's been trending down. Was that a deserved trend?
No, I think it's really sort of a mirror image of the ridiculous, psychotic excesses in stocks like Apple and Tesla. You know, I don't think that the dollar index, the dollar deserves to be trading in the low 90s any more than Apple deserves to be valued at $2 trillion. So I think that both trends are really overdone. And when you look at a long-term chart of the dollar, you can see that over the decades, really, the dollar has been pretty strong, and that we've had a correction, but possibly no more than a correction. Is silver also taking a beating? Yeah, especially because silver was doing all it could to catch up on the gold-silver ratio. It really got bent out of shape above 100, and to bring it back in line with more historical trends, silver had to do a lot of catching up. So it got even more overextended than gold, and silver is getting hammered pretty good. It's down about $2.20 right now, which percentage-wise is more than gold. So yeah, silver is really getting it's taking it pretty hard today.
Now, do we look at this as a trend, or is this an opportunity, a dip?
I'd be real careful about calling this a dip because, as I just mentioned, even my own forecast is looking for a potential major turn in the dollar. And if that's going to happen, it's going to put bullion under pressure. And I don't believe that it's really going to be a straight, dollar up, gold and silver down. I think that we could see gold and silver rising, even as with the dollar being strong. But as in the more immediate, on the more immediate horizon, I think you're going to see weakness in gold and silver as they accommodate to the idea that maybe the dollar's very nasty correction is close to ending.
What's behind the end of the U.S. dollar going down? Is there a philosophy, or is it just overall economic momentum?
Well, on August 23rd, March 23rd, when the market hit a bottom in its crash, all the chimpanzees who manage other people's money decided on pretty much the same things. They saw such enormous dollar stimulus, some monetary stimulus from the Fed, that the inflation story has held sway ever since. But my gut feeling is that the few trillions of dollars that they put out there by way of stimulus are not even a drop. They're not even a drop in the bucket compared with the amount of debt that has to be redeemed eventually that's denominated in dollars. So essentially, debtors having to settle up in dollars is going to create a lot more demand for dollars than this gusher of stimulus will contribute to inflation.
How long can central banks around the planet continue to buy up ETFs?
Well, they're playing in the sandbox right now. I mean, it is very easy to inflate stock market and financial assets, but even the central banks all working together with even 100 times the stimulus that Jerome Powell has conjured up, that wouldn't even begin to address a debt implosion, the one that's coming, essentially because of all the financialized infrastructure. I'm talking about a $250 plus derivatives market. That's all essentially it's daisy chained out. It's leveraged from collateral that whose value is let's say questionable. And I mean the energy patch for one. That's a big source of leveraging for that $250 derivatives market. But all the central banks together won't be able to do anything to alter a market event in the dollar, where the dollar simply starts heading higher, and that's going to be bad news for planet Earth.
When you say they can't stop a market event, are we looking at another crash like March or even worse?
No, much worse. You know, what we had in March is almost like 2008 and 9, when everybody decided, well, the Fed can certainly get us out of this hole. But again, the number of dollars involved here is so huge that it's a hole we're not going to get out of. And I think it's been clear for the last 40 or 50 years that the day of reckoning would really come. It would be driven by a dollar event, because again, it's very easy to manipulate all kinds of markets, but the dollar is just too big.
Is the downward scene for gold and silver today just market manipulation?
No, I don't much believe in the whole, not that there's not a lot of thievery and manipulation going on in gold and silver, but I think the larger trends are more defined by true market forces. So today, the move down is somewhat exaggerated, although, as I said, I'm allowing for the possibility that it could be the beginning of something more serious. So, no, today is not manipulation at all. It's really simply a reaction to the fact that gold and silver have been kind of high voltage the last couple of months, and giving bullion bulls a very rare, exhilarating ride higher.
We'll have more with Rick Ackerman right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
Welcome back. We're speaking with Rick Ackerman. Rick, if gold and silver have taken a downward dip, at least today, and maybe a bit more than just a so-called dip, is this bad news for the junior miners?
Well, I think they could show more resilience than you might expect, because they under-discounted a lot of bullish things on the way up, including the greatly reduced energy costs that miners have for producing an ounce of gold. I mean, it takes a lot of energy to blow up whole sides of mountains and dig tunnels and crush rock to extract minute traces of gold. So it's very energy intensive, and even the labor component of mining has swung in favor of the mining companies. So I think we should. It's not going to keep the exploration stocks and the mining stocks from going down, but I think they're not going to be going down quite as ferociously as the price of physical metal if we're in the throes now of more than just a minor correction.
If the stock market makes a major correction, would gold and silver become brighter, more secure?
I think that gold and silver and stocks will come down with a wholesale dumping of assets. This is what we saw in late March. Pretty much everything was down. Assets were being sold across the board. But you have to distinguish really between that kind of selling, which is sell everything because everybody's getting liquidated, with, let's say, a more measured selling that's attempting to evolve with the changing picture, with let's say the bullion, as we were just talking about, adjusting to a stronger dollar or a strengthening dollar. That would be something new. But eventually, you're going to see gold and silver discount the extreme difficulties that we're headed into. We're probably 2/3 of the way to a global depression right now, and it's pretty obvious that the market has over-celebrated. It's hard to say what it's celebrating. I mean, the story a month ago was that it was hopeful that we'd get a vaccine, but let's just say whatever anybody who's that hopeful to push the Dow to new all-time highs simply because we might get a vaccine is crazy. So the market's got to make a huge adjustment here, and it's going to come out of the 10 or so stocks and the S&Ps that have most of the movement. If you strip out just a handful of stocks, you find that we haven't really had much of a bull market at all.
We'll have more with Rick Ackerman right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Ackerman, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, is there any safe place or safe havens out there?
I would say just make an effort to buy things that nobody would touch because the yield is too low. Anything that looks like a horrible investment right now is what you should make a beeline for. Certainly the yields on treasuries are low enough to qualify for that. I'm a little wary really about junk has had a huge play, mainly because the government has backstopped corporate bonds to the extent that it's not much worse risk than treasury bonds themselves. So the junk bond rally is kind of overdone, but I would just stick with things that look pretty mundane. That could be a utility company that has a good dividend history. That would be another place I would go. But just really conservative plays in things where you can imagine that cash flow will continue more or less indefinitely. And you can see that really, you can see the story take shape in a lot of these stocks. There are some, it's true, I mentioned Chipotle earlier as being ridiculously overpriced at $1,200 as compared to $415 a few months ago. But on the other hand, it's clear right now which businesses will continue to operate and even flourish no matter what happens. One would be the grocery stores, although their profit margins are very low. But another would be takeout food restaurants, and you can kind of see who's going to live and who's going to die. And in some ways, I guess you can't blame investors for going all in with one particular theme. They're thinking, where else can we put our money? And as pricey as Chipotle and Apple are, they're going to continue to sell products to make money. Actually, I'm not going to include Apple in the same category. I think Apple is very vulnerable because it sells ridiculously overpriced hardware to cult buyers. And to me, that's just incompatible with the global depression. It's going to affect Apple's markets. And so I think Apple is probably the most overpriced stock of them all.
So, Rick, if you had to sum up things and what people should do, what would it be?
I would say hunker down, get your own debt under control. You want to go into this coming conflagration with as little debt as possible. Just be sure that you're able to cover your costs with whatever income you have from whichever sources. So, we're essentially going to experience a massive deleveraging. So don't get it in your head, no matter how many teasers you get from Motley Fool and all those guys about how, you're going to, here's a great way to not only survive the coming depression, but to profit. I think they're dead wrong there, because we're really, as I said, going into a global deleveraging event. People make their money on leverage. They're making their money with insider stock acquired at 3 cents a share that eventually greater fools come in and bid $130 a share for. But nobody makes money in a deleveraging, and the best you can do is hold on to what you've got now. If you've got savings, keep them in cash or near cash, and in 10 or 20 or 30 years, when everything settles out, maybe your children will have the cash they need to become the next. This is actually what I'm telling one of my sons. He flips high performance cars, and he's done pretty well so far. He's kept his inventory lean, and he knows his business too well for me to tell him how to do it. But I guess I've tried to tempt him into being careful by saying that if he's got cash when we hit bottom, then some of these cars that he's buying now for top dollar, he'll be able to buy for 5 or 10 cents on the dollar. He's young and he's never seen a recession, let alone a depression. And but anyway, just don't mistake this deleveraging event for opportunity. It's not. I think the geniuses will be challenged to hold on to a fraction of their current net worth.
Rick, thank you so much for chatting with us.
Well, again, always a pleasure, Jim. I appreciate your inviting me on.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. If you have any questions for Rick or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HouseStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.